The materials sector is roaring again, and that's following one of its strongest pullbacks in years. These are the moments that offer last chance opportunities to capture the huge upside material stocks provide. So tonight, we break it all down and give you some ASX material stocks that are gearing up for massive rallies. As the brains trust behind Australia's leading government-accredited share trading education and market insight that is regularly called upon by major media outlets, we'll show you the professional stock market playbook that actually works. I'm Philip Zortevsky, joined by senior analysts Janine Cox and Pedro Banales, and we are Wealth Within. Good evening.
Good evening. This is an area to get really excited about.
It is. I know the moment we decided to do this show, I thought of you and said, okay, materials.
Oh, thank you. That's so nice of you.
Yes, and it's going to be great. We're going to be diving into some great stocks. Pedro, welcome aboard.
Thanks, mate. This is an awesome second chance opportunity for anybody that missed on that earlier run on the materials sector. So I'm very excited about this show.
Yeah, and you've picked some amazing stocks. I've already had a bit of a sneak peek, so stay tuned for all of the stocks we're going to show tonight. But let's dive right in. Now, materials was one of the best performers in 2025, no doubt. Now, one of the worst performers in 2026, down 20% from the all-time high. But is this sector right now shaping up to be the trade of the year? Janine, I know, we always try to distinguish what's a pullback, what's a correction. Huge 2025, pulling back in 2026. Is this the time for that second chance or last chance opportunity?
Look, famously, I like to give short answers, and that is yes. I think it is.
Yeah.
And, if you only have to look back in history at the boom that happened in those last couple of years before the top, and materials led the way. We've seen the material stocks already take off, and they're coming back to test really important support, which they're all ticking boxes at the moment, and they've just got to do that next bit.
Isn't it funny when you get that, right? You see this huge blow off, and then you get the FOMO come into the market, but then you get these really interesting opportunities where the market unfolds in a way where it's like, ooh, this is
often the best bit comes second.
Yeah, all right. Well, we're going to dive right into that. But I want to get your thoughts on these two, Pedro. Now, would you be purely looking at the materials for the rally, or are you widening out to potentially precious metals, maybe, plays like gold and silver, given they're also coming off heavy selling?
Yeah, absolutely. I mean, within the materials sector, there's subsectors. You've got, like you mentioned, the precious metals. And of course, you have lithium, you've got iron ore, you've got all of those other, the rare earths, they're also in the materials sector, and they all have their own cycles. And that's why it's important to really get involved with the timing of each market. We saw, unfortunately, the pullback in gold, and many people get caught up in that pullback as they bought near the high. So it's important to time this correctly and definitely expand out to different subsectors of the materials, because there's definitely opportunities in many of those subsectors.
Yeah, fantastic. All right, well, let's not wait any longer. Stock time.
Yeah, we don't want to hold you in suspense for too much longer, because we know that you're going to love this. Let's get into these ones. The first one is Mineral Resources. Now, we've seen an incredible rise.
What a comeback.
Yeah, off that. And a nice little consolidation is unfolding at the moment there. You can see on the weekly chart. It's not so much visibility on the monthly chart in terms of that pullback, but what it does show is where we are in the big picture sense, and how far we've still got to go to that top. So if we look at what the price is currently, and we come down to somewhere around this level here, and project that forward to the high, there's still, close to 67% or thereabouts upside potential in the short term, possibly 40% there I can see, but it just depends on obviously where your entry is and the risk that you're managing for this trade, but it looks like a really nice setup. Risk to the downside would be if it takes out this low here, then you would obviously not be trying to catch a falling knife. That would be potential disaster, because the risk is that if it did do that, that it could come back down to these sort of levels. But at the moment, everything's setting up and looking like this could be a really interesting opportunity again.
I mean, don't these stocks just paint the picture of, we've been speaking about it this year in terms of 2026 being active, but, more than that, it's what we do. But a perfect example of that is these material stocks where they run up, they give you amazing opportunity, but then just as quick, they give really sharp down moves, which again is opportunity if you're playing both sides or looking to get that next leg up. But you know, it's so nice when you see stocks like Mineral Resources hammered 70, 80%. A lot of, you know, I was speaking to some traders and investors looking at it when it was down 40, 50, 60% and saying, oh, it's done, the company's finished. And then you get this turnaround, which is awesome.
Yeah, timing is everything, isn't it? That's what it shows. And look, I mean, there are some things that have been plaguing Min, and I'm not necessarily suggesting that those things have completely gone away, but it's important to read about what's going on with these companies at this point in time and not fall in love with that story going into the top, because that's often where, you know, people who are new to the market make the mistake that they get on a really good run like something like this, and then when they ride it to the top, they keep on it, and then it falls off the other side and they're still holding it because they become a bit greedy.
Yeah.
Greed is good, as they
well, the
market's
market's
said.
yeah, but the market's teaching it so quickly these days. I mean, we've seen tech, we've seen so many sectors boom and bust right before our eyes in 1 or 2 year spaces where it's like, be aware.
Never say never.
Yeah, be ready. All right, well, let's get to our next stock, which is ALK Pedro.
All right, ALK. I like this one because it's got exposure to gold, silver, and also copper, which we've seen copper prices actually not travel as far as gold and silver did, but I think that that has potential to run in the near future. So let's have a look at the chart to see what's happened, because it has had a significant pullback here. You can see on the weekly chart from that previous high back in February 2026, it's had that 27% drop. And usually that 27% drop does mean that it's still within that correction territory. And it's not unlike this stock to have these types of pullbacks. So we can see that back here in 2025, October, it's had that 25.5, basically the same as it has now. And previously as well, back in May 2025, look at that, 26%. So it's within the order of that range. So I'd be very interested to see what it does from this level, because it does look like it's reversing to the upside now. When we look at the daily chart here, this is today's, this is Tuesday. Yeah, today's price action, and it looks like
Tuesday,
it's
mate.
Actually, yeah, that's right, mate. It's a short week, Easter week. It's hard to know your days. So it's actually reversing to the upside. So I would just put a nice, momentum down that downtrend, and if it does break above it, then it's looking quite nice. I'll move back to the weekly chart just to give that a bit of a longer term perspective. So that would be my case for Alkane, because there is that I would say risk that it does break below that low of $1.30 and then keeps trading down, because you can see that previously when it's had these boom and bust periods, it travels to the range of around that 1,700%, 943, and this latest move that it's done, it's only gone up that 382, but still you have to look at it into perspective in terms of price and time, and whether this is that final move before that eventual drop. And when it does drop, it moves in that downtrend for many years. So you don't want to get caught up in this. And this is where the trick, I guess, to these types of stock is, and where many traders that come to us get caught up in is, how do they identify these moves? Because it only happens in a short amount of time. So how can you ensure that you're in this move and out of this one? Because you've got plenty of time to get into this down move, plenty of time to lose money, but you don't have much time to actually get into these sharp, increase of price. So you do that obviously by recognizing the pattern recognition and learning how to read a chart. So that would be my thing. Obviously, further analysis needs to be put on to determine whether this is really the start of maybe a break above that all-time high of $2.10, or is this a top and now we're moving into that longer term kind of a downtrend? So this one is interesting. Again, I'd just go back to the weekly chart and apply some rules and see a break above that downturn momentum.
Yeah, fantastic. Now, if you do want to learn how to read a chart and do some of the things Janine and Pedro are showing on the show, check this book out, How to Beat the Managed Funds by 20%. It's free. You just have to pay the shipping. It's in the description. The link is of this video. As always, if you want to take things professionally into the next level, please go and check out the website. See the Diploma of Share Trading and Investment. It's government accredited. You won't find another one like it. And please go and check out our testimonials to see all the results that our clients are having right now, which is amazing in these times of heightened volatility, which is even better. But let's go on to our next stock. And it's fallen on you. Obviously not BHP, but the next best thing. So please don't punch me.
Yeah, I looked across the list and I didn't see BHP on there, and I wondered what's going on.
We've done it a lot.
Materials and you left that one off. Come on, what's the conspiracy here? But anyway, we have done it a lot, I'll agree. But let's get into Rio. Okay, now you were talking about the course, and I had a conversation with someone. This was a long time ago, and this is sort of a you know how when you're looking at certain stocks and you've spoken to people about stocks and why they should do the education. When I look at this one, someone said to me once, well, tell me one reason why I should do it.
Yeah.
And I said, do you own Rio? And he said, yes. And I said, well, okay. I just wanted to tell you that in the GFC, Rio was one of the most significant, had one of the most significant sell-offs of any stock on the market. And if my pointer would work at the moment, I'd be able to show you what that is. But you can see here it fell by 80%. Now, who would have thought that, and that changed his mind, who would have thought that Rio would fall that amount? You know what I mean? If he had have just applied some of the rules that work with Rio, and it doesn't necessarily mean it's one size fits all, but because you have to actually work out what rules are going to work best on a particular stock. But you know, that's 80% fall is a good reason.
Yeah, and I think it even also to add on top of that, when you look at how long it took Rio to recover, it took almost from 2000 and whatever that was, 9 up to 2021 to get back above the '07 high. And you can see that the way it traded through that period was not clean. It wasn't super strong. They had a long, in fact, half of that period to get back above that high was the market trading down.
Exactly, that was all that time.
Yeah.
And there was a concern at this point here, and we actually thought there was a potential, and in these lows here, that it could take out that low. So can you imagine, you know, that's the risk that you're staring down if you're continuing to hold it. And eventually it did come up, but that's a long time.
13 years of opportunity cost.
Yeah, and I guess too, the other thing is thinking about the people who bought in up here when the market was, you know, supposedly really hot, and we were saying to people the top could be coming, and they bought in here, and they're the ones who have been down all that time. That's the most concerning. Probably people who had bought in around this level and would buy and hold. You know, maybe you were shocked. I mean, I remember people who were absolutely devastated, you know, wishing that they had have sold it and they hadn't because they didn't know how to. So but that's the thing.
We've also got data, and we've shown it before, to say that, you know, the statistics were that people were buying right near the top, not at those really nice levels. I mean, when you look at some of those external charts that we've shown, please check out the website and our YouTube channel. We've got some of those charts that we showed. Recently, we showed one on gold, so go check that out.
The leverage goes through the roof, you know, because it's the same sort of shape as what you see on the chart. If you look at this chart here of Rio, it's called a bell curve, and it's shaped like a bell, and that's how it goes. Everybody tries to sort of scramble in and leverage up more all the way to the high. So
yeah, and if you're not looking at a chart, how are you going to get the best price?
Exactly. So if we look at what Rio's doing now, when you think about it, it's not much further than where it was through the GFC right now. So this is where, you know, we're getting quite excited about it.
Can I ask you, does Rio today, when you look at the scenario, given that it had that 4 or 5 year period of consolidation, does that give you more confidence that this has got more legs, even though we're trading at the all-time high compared to, you know, us being in a period like in '07? Is that maybe something that's giving you more confidence to say, hey, this one's been building for a long time, we're not totally stretched like we were back then?
It's giving all those signs that it is setting up for another really good run, and that's what Phil's talking about here, because then that provides the foundation for that next run up. And the market thinks, well, okay, we were paying that before. The market was prepared to pay $1.70 for it. And looking at the analysis, I can see this stock going through 200.
All right. Cool. Good stuff. All right. Well, let's move to our next stock, Pedro, BIS.
Yes, this is Bisalloy Steel. Now, I have to say there's a stock that's coming in the second section that was going to be my favorite, but this one's giving it a good run for its money, I'll tell you that. So right now, this one, the PE ratio is sitting at around 11. Dividend yields about 7%, which is great. And they're involved in the manufacture of high-grade steel. So for engineering type projects and that heavy type of steel used in machinery and notably submarines and things like that. So this is a very important company that we have here. And you can tell by these recent spikes back into 2023 is really when the personality of this stock started to really take off. And that's when the volume really started to come in. And this is the crisis period, prices, I would actually say, for this, because unfortunately, we do have multiple wars popping up around the world, and this is a beneficiary of that, providing those high-grade steel products. And right now, it's had a bit of a pullback. So I think that there's an opportunity coming. But it doesn't mean that it's right now or it has to happen within the next few months. But I'm just saying that it's coming back to the angle of this rise. So we've got that kind of momentum, and it could come back to that $3, say $3.50. Until it bounces off that level again. But still, I mean, at the moment, it's holding up above this important level as well here, which is that $3.60. That was a very strong support level back in 2007, and it was important recently as well. So that kind of cross section there around that $3.60, that could possibly be a bouncing point if it doesn't bounce right now. But looking at it on the weekly chart, have a look at this, the way that it was sold off, but then this latest bar here, it opened up low and actually closed above all of this price action that we saw in the prior weeks. That tells you a lot. That tells you the strength of the sellers are coming back. They recognize value around that $4, and now they're willing to take it higher. Sure, it's falling a little bit now, but of course the week isn't over yet. I think that this one is looking great. Good opportunity for a second chance. If you missed out, on this latest rise, but now it's providing another opportunity. So keep an eye on that $4 level, and I think that a rise back up to that $6 could be on the cards for BIS.
Yeah, that's got some nice short-term upside there for sure. Let's go on to the next, because he's got his favourite in the next batch. On purpose, I swung him around before we started the show just to trick him up.
Okay. All right. So you want to talk about the next one. Is this, what is it called? Metals
MLX, yes.
MLX.
Yep.
Metals, let's have a look at that chart. I mean, what can you say? It looks similar to the other one in terms of the angle of this rise going up here, all of a sudden changed it and it accelerated away. If we expand out that monthly chart and take a look at the longer term perspective, we can see that it's broken through something really important. I mean, this is a historic level that you see stocks break through, and then to come back and test that, oh my goodness, if it does that. Now, look, I'm not going to say that I can 100% rule out this sort of scenario again, but in terms of the big picture patterns, it appears that it's finished all that, started a completely new formation, and then it's just coming back to test this before making another run. I could see it moving up to sort of head towards that $182 mark quite easily, but we just need to see it test that level. It could even take out the all-time high in that process. So this is really promising, I think, Phil,
yeah.
and it just shows these great little consolidations and sideways moves and breakouts and sideways moves and breakouts. And I think we're going to see this as another one again. How long it runs for, that's the question. You've just got to be watching it and having your rules ready to go, understand how to trade it, and looking at what happens in the sell-off when it is sold off, and how can you preserve your capital and protect yourself during those scenarios.
Yeah, some great advice and some amazing stocks actually this week, which is
really interesting.
Really interesting. All right, well, that wraps up our first round, and we have some more amazing stocks coming shortly. But now it is time for our trending topic this week. Janine?
Right, and a big one. We've got Toyota CEO Koji Sato has rung alarm bells and sent a warning to suppliers, stating, unless things change, we'll not survive. The world actually took notice. This follows concerns about the rise of China in the global car market. Now, when CEOs of companies like Toyota speak, the world takes it seriously. Toyota's famous for just-in-time and improving efficiency in manufacturing, but China is the dominant player in the global car market. And to be more competitive, Toyota's calling on suppliers to improve, and the graph illustrates what's really going on out there in that global market. You can see the strength of China's position, more than 30, I think it's million cars sold, United States is half that, right? Which really surprised me. I thought they would actually be higher than that. In Japan, who is incredibly efficient car manufacturer, is lagging and concerned about market share going forward and losing that to China.
Yeah, it's very evident. I mean, just take one look at the options here in Australia, and it is flooded with options coming out of China. But it's interesting when you say, Toyota. We're talking about traditionally known as the car, the safe car, the strong car. Crazy times.
Isn't it? Yeah, and most reliable car as well. Australian suppliers have a great opportunity, the way I see it, and Aegis Automotive is one company that's worth a look. I mean, they've done a lot over recent years and had a number of different projects. They're a very interesting company from the point of potential. They've been rising strongly, although recently they've pulled back, which presents another opportunity, I think.
Well, it just, going to your point, Aegis Automotive is the biggest distributor of BYD, which is one of those Chinese car brands that would make up a big chunk of that 30 million in terms of annual sales. So
they're benefiting from the whole surge, aren't they?
Yeah, and I mean, they had exclusive rights at one point. I know the company had exclusive rights to BYD. Now they don't, but they're still the dominant player in terms of all those distributing.
And that's something to be really proud of, isn't it? It's fantastic.
Well, you're looking at a company now that its revenues coming from the hot area of that sector, which is. It's got to be worth taking a look at. Yeah,
it is. And look, it's off from the high at the moment too, which could present a good opportunity to just keep an eye on it. So it's fallen more than 40% from that high there. And look, we expect these things to happen. We've seen our miners come back to some of these sideways consolidations. So these sorts of patterns are not just in the materials space. They're not just in banking and finance. They're in all sorts of commodities and things that you've got to be watching out for. So once we see that settled down, it will present another opportunity, and it might not be too far away.
Yeah. All right. So you're just saying sit and watch APE right now and
just keep a good eye on it and put it on the watch list and do the analysis on it. And if you don't know how to do the analysis on it, that's where we come in and we'll help you do that so you can lower your risk.
There you go. Give Janine a ring for answers on APE. Now, if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Janine, what do we have next?
All right. This is another good one, Fortescue. Everybody loves Fortescue, and just have a look at this chart. You can see the pullbacks unfolding still at the moment. You're not too late at this point to the party, because that's one of your words, Phil.
I'm always late to the party. Well, my wife is anyway. I'm pretty early.
All right, then we won't go into those details, but we know what you guys, you can just jump in the shower, jump out, and then you're ready, whereas it's not the same, is it, for us girls?
No, but I mean, I think, efficiency is one thing that can be worked on.
Now that we've just been talking about Toyota, that's pretty appropriate. Yeah. All right, let's have a look here. Fortescue Metals, FMG, we can see there's significant resistance here around 23.30, where it made that peak recently, and we've been watching this stock fall down and then reverse back up again, which is really nice. So I'm just going to, first of all, just quickly give us a snapshot of what's going on in the big picture space. Long-term sideways formation. So technically, FMG's done nothing since December 2020. It's done nothing since after that recovery out of COVID. And this is where the opportunity is, I think. The risk is if it falls below the low of this month. So that's a pretty important yardstick to have for FMG. If we look at how far it's come back, it's not out of the question to see even a big stock, a good stock, come back and pull back to this sort of degree. 20% is pretty normal, and it's really healthy to see that sort of pullback before a rise happens after that. We saw that sort of move happen in here, and then Rio went up for 5 months or something like that to the high before it then fell away. If it goes up again, it'll be really interesting to see if FMG can push through that all-time high. I won't be, I'm a bit on the fence about that move just yet, but I am pretty happy about where FMG is setting up and looking for a move up to challenge the high anyway, because if we see this point here, we can see that there's still 27.5% to the upside. So depending on what your risk reward calculations are, then that may or may not fit your criteria.
Yeah, that $24 seems like it's held up for a while. So
yeah, it has. And the longer it goes sideways, the more we've got to watch that low. But if hopefully, in the coming months, we'll see that move and it'll break up.
All right, there you go. Watch $24 for FMG. Let's move on to our next one, PRG, Pedro.
All right, so this one is PRL, and Janine, I'm glad that you're sitting down for this one before you take a look. Just check if she's all right, Phil, after seeing this
snuck one in, you had to, didn't you, mate?
Oh, my temperature's just gone up, it's running hot.
Yeah, but I mean, you have to have a strong stomach for this one, but I promise this one's high risk, but also high reward.
So let's get onto the chart. Let's ignore the weekly chart for now, and let's just go straight to the monthly here. You can see that it was quite an illiquid stock all throughout 2011, up to 2015. Then it did change character a little bit and started to trade more like a normal stock. You can see full bars, good ranges on the bars, and then it started to trade down. It started to get a little bit more liquid again back in 2021. But now it's resembling that same type of liquidity and bars as we saw on this previous run. So this is, really piquing my interest, because not only that, the pattern is showing a higher high and a higher low, with price wanting to be picked up from around $1.20 and now essentially moving up. Now I have to mention that PRL is involved in the production of phosphate rock, which is used in fertilizer. Now, with all these disruptions that's going on, especially with the Russia, Ukraine, the Belarus region as well, which are the major exporters of fertilizer, and of course the Middle East also being a major provider of fertilizer. I think that this company is well positioned to pick up the slack, if the demand rises here in Australia. So, and you can see that already the smart money is starting to move in. Let's have a look at what's happening with volume, because that will tell us a better story. Now, of course, on the weekly chart, you wouldn't even look at a stock like this around this region. You can see that from one close to another one, you got 16% just in 1 week, and then it just opens up again back up to that other level a few weeks later. But right now, it is looking a little bit more liquid. We see volume being spiked. We are seeing, just on average more liquidity, and the bars are starting to look a lot nicer. So I think that this one is one of those high risk but high reward stories, because a move back up to that level here around that $2 could be on the cards initially for a short-term trade, and that represents around that 25%. But if this thing keeps going, then of course it could go up to challenge that all-time high, and that's a further 35% upside. So I'd keep this on a watch list, but not in your bread and butter type of portfolio, if that makes sense.
Yeah, makes complete sense, Janine.
And not for beginners either. That's one thing I was going to say, because, we teach people how to recognise liquidity, and so that they know what to look for, the best stocks to pick. Just because a stock's above $1 doesn't, I might say $1's important, but there would still be other filtering and criteria that I would apply to determine whether it's okay.
Yeah, he got one in, that's all right. Let's move on to our next stock, VMC, Janine.
All right, now this has really piqued my interest, and yes, it's below $1.
Oh.
But I just love the way that it's unfolded. It's just incredible. It's come back to test that long-term low, which it's hit a number of times. Really interesting. It's broken through that, it's reversed, and it's now trying to find support on there. Now, look, as Pedro was talking about with liquidity, it is really important. Why? Because if you buy into a stock that has low liquidity and you go to sell, you may not be able to fill your position at the price that you want to. It's one of those left with your pants down moments. That's the way I would describe it.
Yeah, and you don't really want to be in that position. I mean, especially in the markets.
My joke. I know that I'm a bit dry when it comes to the joke area. Dale tells me that all the time.
No, I love your jokes. That was a good one. You caught me in between trying to get a drink of water, so I didn't have too much of a chance. But when a stock breaks out like this, how interesting is it?
Yeah, exactly. Especially when we see this big reversal really quickly, just get it over with, get that reversal over with, let it find some support, and then see whether the market really is going to push it higher. Let the market test it for you. Don't be keen to be the one to be the dummy who tests it.
Yes.
All right, so that's what I can say. But this one, in terms of potential, well, where do you draw the line on it? I mean, it could end up at 50 cents is a real yardstick figure that I would pick. It's miles from the dollar mark at the moment.
Is this something because, when you look at this chart, big sideways accumulation over, 14 to over 10 years, it's finally done something different that we haven't seen in 10 years, being accepted at 30 cents. Is this one that you still have to exude caution on in terms of what your projected upside is? Because I know, you want to believe that, okay, it's popped out after a 10-year sideways move. This is going back up to $1.20.
I actually think that people are better off not to focus on that.
Yeah.
Because that's if we're talking about stocks like this, people will be saying, oh, look at that one, I can make a lot of money out of that one. But that's not what you've got to be focused on. It's all about the risk, and even more so right now because of the volatility and liquidity. So if the risk doesn't make sense to you in terms of where you're thinking about getting in, and it doesn't make sense from a logical point of view, so some people might be trying to buy in right here.
Yeah.
But why would you when all of a sudden it could dip really quickly and not just take a little bit of your money, but it could take a lot of your money? It's about where's the point where it's going to be lower risk for you to get in, and where do you set that stop loss? Forget about the upside, because then once you're in, then you're in the driver's seat. Then you just, you've got your stop losses, you break, and you've got plenty of upside in terms of where you're going.
Yeah.
Sky's the limit potentially, but maybe, sometimes we've seen the reverse of that, so that's what you've got to be aware of.
Yeah, and it just allows you to manage it better, not fall in love with the story of it going to where you think it's going to go.
Yeah, because how many times have we spoken to people who said, look, I've got a target for this stock and I'm not going to sell it until it gets to that point, and it never gets there.
Yeah, and they give up so much profit not listening to what the market's telling them there.
I'm sure I've done that at some point.
Yeah, at some stage, I can second that. But anyway, let's move on to our last stock for now, which is IGO. Pedro.
All right, lucky last. Yep, as you mentioned, IGO. So this is a company that's involved in nickel, copper, and cobalt. So heavily involved in the renewables space and the battery space, all materials needed for that clean energy transition. So let's have a look at the chart, because I think that this one is presenting a beautiful opportunity right now. And that may be a bit of a hint as to, whether I like this one or not. Much like Alkane Resources, this one has those nice pullbacks that you can capitalize off. So we had this previous pullback once it rose from that low of that 30%. And right now, the pullback that it's presented is around that 30%. So I think that this is make or break. If it does hold above this level and it breaks above that $8 on strong volume and we see a rise up, I think that this one is on the precipice of a new long sustained uptrend. Let's have a look at where the current momentum is at the moment. So from that low there in 2025, it sustained it beautifully. Yes, it's dipped below that momentum a little bit, even back in here in 2025, in November 2025, just briefly, but it's touched it beautifully lately. And it also coincides roughly with around that level there, which is at $6.70. You can see that is a very important level, even going back to as far as, and if I can move this along, boom. Have a look at that. That was a previous all-time high in 2020. Sorry, not all-time high. It was a previous high. But you can keep going back to the history of this stock, and you can see that $6.70 was a very important level. And this is how charting can really give you that edge on your trading, because levels that have acted as support and resistance in the past are likely to continue being an important level for the stock that you're looking at. So right now, this is where we're at now. We've got momentum, price coming back to that momentum, back to a very critical level. It's now reversed back up. Let's have a look at the weekly just to close this off. And price is holding up. Yes, it's trading a little bit below, but we have to say that with trading, you have to put ifs and buts everywhere. You can't just say, yes, this is definitely going to do this. And even when we say things, it doesn't mean that it's actually going to happen. We have to put conditional conditional things on the chart saying that, yes, if it breaks above a certain level, we're good. If it doesn't, then of course it's going down. And that's what makes you good as a trader and flexible. So for me, that upper level here is around that $8. If it breaks above that $8, I think that we're rising. If it breaks below that $6.70, then I think that we're going back down. But I would lean the probability to it breaking that $8.
Yeah, fantastic. All right, now before we move on, your favourites, Janine?
I knew you were going to ask that, so I was sitting there just trying to think about, okay, can I quickly get this one out? I like Rio for the big stock, but I like IGO. I like that. I actually like that Metalex one. It's quite surprising.
Yep.
And I like Min as well.
Good.
So, sorry, Pedro, I took them all.
Pedro?
The good ones.
Look, I have to go IGO. I was thinking Bill, IGO was my original favorite, but I can't go past that. That chart is looking beautiful.
Yeah, I mean, I think they all look pretty good, to be honest. But there you go, plenty of choices. Now, moving on, shortly we're going to get into our hot stock tip this week, but first, let's answer your questions. Liana writes, interested to get your opinions on Downer EDI as it's in an interesting price point. I see a strong bearish move on the March monthly bar, next support at $7 and then $5.85. I'm not in the stock, but could this be the turning point for its decline? Now, I'm going to ask you on this one, Janine, but turning point for its decline, is she wondering whether it's going to keep falling or?
Yeah, I think she's onto something there.
Yeah.
Because she's probably concerned because it's come off now, so really good point in time to be having a look at this, so well done. And looking at the downside, 16% it had fallen to this low, but why is it doing that? Well, when we look at, it doesn't matter what the news is about it, it's more, look at all those highs there. So it's about what the market wants to pay for it and saying, not sure yet, but it's almost like, you need to take a run up to, when the athletes, they take that run up the pole vaulters.
Oh, yeah.
And this is one of those moments, you've got to let it take the run up to get over that big hurdle. And hopefully it does, but time will tell. So, the thing to think about right now, if you're in it, then you need to have a good set of rules to manage that downside risk. Could it fall further was the question at the moment. Could this be the start of the decline? That's the $1 million question, isn't it? Because at the moment, I can't say that with 100% certainty it's going to go either way until it does. But what we know is that at the moment it's turned down, it's reversed completely the movement, that strong move there. What made that happen? Don't know. It might be something to look into, whether it was material or not. But look, it could come all the way down to that line before it finds support. But we've seen stranger things, haven't we, at highs? We've seen situations where a stock reverses and then all of a sudden the market overthinks it and then it turns around and goes back up again. That can happen as well.
So, I mean, for Liana, is it just as simple as, okay, it's very evident $8, $8.40 is the ceiling. If you're looking to buy this one long, then opportunities up to that level, would you say?
The opportunity's there to buy, definitely, once it breaks through that high, but don't think that once it gets through it, it's not going to pull back at some point, because it really could because of the strength of that level. But again, it's just about having that risk management. But if you look at the trend going up here, you can see that it broke below the angle of that trend for a while and then tried to create a new angle. It hasn't really been able to do it properly yet.
Yeah.
So at the moment, it's...
Plan for the worst and hope for the best.
That's right. And if it goes below this low here, anyone holding it, then you wouldn't, you'd just be checking your rules and your downside risk, but I probably wouldn't be holding it below that low. If it goes back above this high here of the 17th of March, is it, or 27th of March, then it could make a move back up to that all-time high. But for me, I think I'd want it to clear those tops given the strength of all of that.
Yeah, good advice. All right, good email, Liana. Thanks for that. Now, Alex's email is next. What do you think about Woodside at the moment if the oil price drops again? I was lucky enough to enter prior to the gap, so I'm thinking it may be a perfect time to take profit with the more compressed up bar and slowing momentum. All right, Pedro, Woodside, time to sell?
Look, it's. I don't think that the move is done yet. But of course, just think about if you sell, right, and you are in a profit, can you replicate it and why did you sell? Can you document that somewhere and then replicate it in future? Think about those types of questions. Are you a trader? Are you an investor? Are you holding this for the long term? Are you holding it in your super? What type of portfolio are you holding it in? So these are all questions that need to be answered before you make that decision to sell. And of course, your selling rules should have already been listed when you bought the stock. Because that's very important. A lot of the times you forget why you even bought the stock and where you wanted to head. So a trading plan is one of the most important things in trading. So looking at the chart, would I be buying it today? No, I wouldn't be buying it. I think it is extended. And my target or my first resistance level, and I have said that on this show before, is around that $40. So $40 wouldn't be out of the question for Woodside, but also there is a bit of a range there that it could actually just go to that $38, if I can put that correctly. So anywhere between $38 and $40, I think that it could run to before it meets some short-term resistance, and it could come back to fill that gap. I mean, that's the most significant gap in Woodside's history. You can't see any gap that even resembles that. So I think that it is likely to fill it. When will it fill it? Well, we don't know. Gaps can remain unfilled for years. So while it's rising, I mean, this is another question to ask yourself. Would you feel worse by selling it now and have it rise another 10, 20%, or taking profits and then, of course, watching it fall? That's the questions that you have to ask yourself. What is really going to give you the least amount of regret? I would say, because it could have another 11% to rise. Now, of course, you can go to the daily and have a look at the short-term price movements, but I wouldn't suggest that on Woodside because it's quite gappy. It's not a stock that, for most people anyway, to be looking at it on the daily. I would stick to the weekly on the minimum time frame. Now, I have to say that this is a lot of up bars here for the weekly, so it's looking quite extended. So hopefully I've given you enough to make a bit of a decision. I think that's the short term to medium term cap for now for Woodside. It really depends on your strategies and what you're looking to achieve from this.
All right, let's move on to the next one. Cammy's next and writes, what are your thoughts on Evolution Mining as a long-term play? It has performed very well in recent years, but with everything going on these days, do you think the run is over or still in the early stages? Janine?
Yeah, I wouldn't necessarily say in the early stages. I think these are really good questions that you're asking and you're really thinking about this, so well done to you. If we have a look at the long-term chart, that's probably why, if you haven't looked at one of these, then you perhaps don't know the answer to that, whether it's, a long-term position or whether it's more likely has it just started a run. It's actually been running for some time now, and, it had this long-term period where it really wasn't going anywhere, and then we saw the pullback into this low in October 2022. This is actually the bull run, which is, when we look at the percentage terms, in terms of how far things run from that low there, if I can just grab that there, and we can see it's already run 880%. Now, if this is where the power of the chart is so important, and it's why you need to do and study with us and learn this, because you would be able to look at a chart and say, well, has the run just started or is it towards its end potentially? And this one, it may still have further to go, because this is the first big move that we've seen to the downside, the big sell-off. So it may turn around, but I mean, that's a huge sell-off, isn't it? Let's face it. Let's look at the weekly chart just to get a better idea on that. And I'll go across to the weekly chart. It's dropped down. We've only seen 3 weeks down at the moment. The longer it stays down, the more likely it is to, continue into more of a downtrend. There is a gap here on the weekly chart, so the risk is that it could come back into levels that it's preferred to be at, which is around that $9, $10 mark. So there's still the potential for a bit of short-term downside. There's also a gap on the upside. So if it travels back up to this level and then it starts looking like it's going to go sideways and then challenge this high, it might actually turn up again. It's a possibility. I mean, if someone was trading this and had been trading this all the way up, I would have been taking the money out of that, just because of the fall that we've seen on it.
And the steepness, I think, it's a bit of a clue when stocks get vertical.
Exactly.
Kind of tells you where
But
it's
then it
at.
depends. If he's talking medium to long term, right now I wouldn't be in anything for the long term in the market, given that we could be heading towards the top. I have said to you before that it's 2027 that I'm expecting the market top, but because of the Trump scenario, the analysis also leaves a possibility when we're looking at the overall broader market and the way that it has unfolded over history that we could see it run out to 2029. So if that was the case, then you've got plenty of time here on this one, even into 2027, for that to turn around and go back up through that high and make a new high.
Yeah. Good food for thought. But let's move on to our next theme. Now, Paul is next and writes, I've heard you talk about shorting opportunities before. With oil prices being driven by geopolitical tensions right now, I'm wondering, does it make sense to look at shorting oil on the assumption that global supply chains will eventually adapt and redistribute supply even if conflict drags on? Now, Pedro, I'm going to go to you on this, but this is a very, very good question because I see logic in what he's saying. What are you thinking?
Yeah, absolutely. He's definitely on the right track here. I mean, we've got so much built up oil right now sitting around the Strait of Hormuz, just waiting to get out. And as soon as tensions ease, that oil is going to flood the market. We had an oversupply before this happened. So really, we're just seeing geopolitical risk prices at the moment, and there's a lot of technicals pointing to the fact that oil could actually reverse quite sharply. But the question is when, and I'd be very careful if you're not experienced to be shorting in this type of environment with such fluctuations and volatility in oil, because it could actually go to a new all-time high or challenge that previous all-time high. So on the chart, you can see that it was actually favoring the shorts for since 2022. The short selling was quite lucrative, and I remember taking short positions around this and doing quite well from them. So at the moment, even myself, I'd be very careful to place a short bet on oil at the moment, because it's not really showing me signs that this has finished yet. It's holding up at around that 102. Sure, it could reverse quite sharply if we see over the weekend. And that's another thing to note, that usually America likes to come out with their statements over the weekend when the market is closed. So it's very hard to predict these things. You really have to position yourself before the weekend and then, just hope that an announcement comes out. So this could very well travel back up to that 147 previous all-time high, which is around there. It could travel up another 41%, which is what it did back here in the Kuwait crisis when Iraq invaded Kuwait, where we saw prices jump around that 140%. So that could definitely happen. Right now, we've only jumped 100%, so 140, say 160 could lead us onto that all-time high. So the risks are there. I'd be very careful shorting this, but 100% agree with him that, once the opportunity comes, the shorting position is going to be amazing.
Yeah. Janine?
Can I just say something? Look, the thing that's laughable is that OPEC, or the Saudis, wanted a price around 100, right? Because so they've got all this supply that's banked up. Analysts had been expecting that the oil price was going to languish for decades, that it was going to keep going down and down, and we were going in that direction because of the growth, the continued growth in, renewables. But, the Saudis have come out and they've said, that they obviously want a higher price for longer. So if they can keep that price up there, they will. And what's interesting about that chart that Pedro was just showing us is how the price was hovering around those levels. So the market's just skipped to that beat. And this is the other thing, to try to short it when there's that sort of thinking around there, and they can just open the tap and close the tap as they want.
Yeah. Look, the interesting thing with that is that there's also other players coming in. Like obviously the US now are becoming, on the supply side, making moves to try and combat.
Well, as the price goes up, what happens?
Well, they come in and help with but it's an interesting concept. I really like the idea behind it, to say, well, I'm not just looking at what the common view is of everybody saying buy oil. I'm looking forward, and I'm thinking in terms of supply and demand, which is what you should be doing. And then, looking at that chart. So look, stay with it. When the opportunity comes, I'm sure you're gonna have a good one, but not right now, given what's happening around the world. But now time for our hot stock tip this week. Pedro, what have you got?
All right, this week's hot stock tip is Resolute Mining, ticker code RSG. Now, they've just recently come out with a report saying that they've signed a strategic non-binding partnership with Guinea's state-owned Nimba Mining to explore and potentially develop gold projects with government backing and potential for a new mine. It's relatively good news for the company as it supports long-term growth and pipeline expansion. However, it's not yet binding, so it still depends on studies, approvals, and execution. But it does sound promising. Now, I have to add that this is a state-backed company. They're very important there because when you receive backing from the state, that's very comforting for a company. So this could actually open up a fourth revenue for Resolute Mining. So I think that this is actually quite good news if they manage to pull it off. Now on the chart, we can see that price has been rising since the low here in 2022. It's risen to the tune of 750%, but now we're back down to around that 600%. But it's really been range bound for a long amount of time. 2001, basically 30 years, just trading, hovering around that upper range of $2.10 and the lower range of say 12 cents. So now it's heading back up to that upper range of $2.10. That's where the danger is. And let me expand it out so you don't need to wear your glasses, like Janine would say. So to that high, we've got 45%. So possibly a nice short-term opportunity. But really, until it breaks above that $2.10, I wouldn't get too excited. I mean, like I said, for a short-term trade, it's okay. But if you're looking for that longer-term exposure, then you might want to wait to see what happens above that $2.10 if it does break above it. And then it could do something along these lines where it breaks above it, then comes back and retests it, and then maybe takes off again. Who knows? But really, what you want to be watching here is the weekly chart, because that's going to give you that initial sense of what it's going to do. And I can see that it resembles a similar pattern that it did back here in 2025, where from that peak, it actually reversed 35%. It hasn't reversed as much now, it's 30%, but we can see that we've got a similar bar unfolding where price gets picked up again. So this one could be on the verge of a rise. And how much did it rise from that low back there when it did rise? It rose 115%. So if it was going to rise another 115%, then we could be looking at prices of around that $2.50, and that would break us above that $2.10 that I was mentioning before. So that could very well be a possibility. So I actually think that this one has great prospects. I love the way that this trend has unfolded, and of course you could put a nice momentum below it, just kind of where it hovers around, and it is trading above it. So I would be very much keeping a close eye on this one, and to zoom out just to see what levels immediately above. Well, I would say that this $1.40, $1.50 is that next level that it needs to break up above before it breaks that $2.10. But hey, we could put levels all day. We need to make a decision at the end of the day whether you want to trade it or not. But I think it's looking great. It's trading within a tight range. Any break above on high volume, and I think this one is looking great.
Yeah, fantastic. All right, if you want more from us, check out our video. Time to buy these bargain ASX stocks at record levels.